is going to be discussing just a few sort of trials, challenges that we've seen, principally sort of from the start of the pandemic, but now more recently looking forward. Just going to be discussing a number of different elements, how it affects or how it has changed the way that you operate, the way that you do business, and sort of, as I say, trials, challenges and rewards that you've seen through your respective sectors.
I'm Nigel Cook, Group Managing Director of Evolution Capital. We're an M&A advisory and we're wholly focused on the mid-market tech sector.
Yes, so Barney, I'm the CEO of Focus Group. We're a fast-growing, independently owned telco MSP in the UK, and very happy to be here today. We're combining an aggressive M&A strategy with a strong organic growth agenda. So good to be here today.
Hi, I'm Ian Mason. I'm Corporate Director for NatWest. I focus on the TMT sector, in particular telcos, MSPs, and what I call digital infrastructure, so fibre to the home, data centres, smart meters, and I've been doing that for about 20 years.
I'm Chris Morgan, I'm an investor at BGF. BGF is the most active growth capital investor in the UK. I lead our TMT investing out of London and South East.
Brilliant, thanks very much. Nigel, if you are just to kick on, what would you say has changed since the pandemic in terms of the market?
I think firstly, you're absolutely right, you've got to consider the pandemic because we're in a bit of a hangover from that right now, but potentially the headwinds of other things are now driving change. If we, we're an advisory firm that's wholly focused on the mid-market, but I think you always have to consider the macroeconomic and the global situation because it has a direct impact on our space. And if you look over the pandemic period, clearly everything went down back in the beginning, but that didn't last too long. When you look over the pandemic period, it's true to say that the tech businesses, and you look at the performance of FANGs, those businesses outperformed and dominated all of the portfolios of the investors. So much so that I think when you look at the value of those businesses, there's something like 50% increase in total value. I mean, it's just a staggering amount to consider. The fact that those companies had more than 30% of the total value of NASDAQ. I mean, it's just quite incredible. So when we look at UK mid-market, we've seen from the businesses that we've been advising and ones we haven't. The sector has outperformed other spaces. There's been more interest in it than other spaces. Investors have seen it as a safe haven, and throughout the pandemic period, it's been a stable and safe place to be because it shares the same business models as the big global high-tech firms. This is about quality of earnings, and this is about high recurring revenues. So that's why they perform well. Of course, not every business performed well, and that's because quality of earnings in some of those mid-market firms, were not as stable and not as large. But I suppose ones that particularly performed well through that period were the ones that had a remote working, home working type of model, or they were quickly adjusting to that space because within a couple of months it was all changing, and it meant that the recurring revenues that the office were paying continued, but then they got all this extra income because they were now putting lines of stuff into homes. Clearly, in the same way in the macroeconomic world, Zoom went really well, and of course everybody bought Peloton bikes and to keep them happy and fit. If we look at the post pandemic world, then what we've seen since the beginning of the year is that the FANGs businesses haven't done so well, and tech has not been the darling of Wall Street. It's a case of that there's underlying reasons for that, which we'll probably go into later. But if we quickly swim back to how the mid-market's performed in our space since the beginning of the year, Similarly, there's been some turnaround in that a lot of the businesses that didn't do so well pre-pandemic, the business that couldn't install, the mobile business that had a lot of roaming charges and that it lost those. There's been a reversal in that they've been able to install, they've been able to migrate, they've been able to do all the things that they couldn't do in the pandemic. We've seen quite a reversal in some of those. Some of the hardware businesses have done very well in the last 6 months. Equally, those that became very largely, attached to home working, have potentially not achieved what they thought they would. So, the pandemic for some people was a man-made recession, and what we see now in recessions is that everything is not even. The last one was particularly good to some industries, and therefore telecoms and IT being a sector that supports those industries. The industries that did well, and the businesses that had customers in those industries did well. And similarly now we're seeing businesses that potentially have customers in things like airlines and stuff like that starting to improve. So I think a reversal of fortunes. Overall, Evolution Capital would say cyber is a space which grows in interest, in value, and we can't see any change there whatsoever. Software, and particularly legacy to SaaS stuff, their interest is high. I think 50% of all the deals done last year was software based in that space. And of course, underlying infrastructure continues to create huge demand, whether that's fibre in the ground or whether that's broadband and stuff, coming out from the cloud. I mean, those are the three spaces, I guess, that we see as really solid performers going forward.
Right, great. I mean, Chris, Nigel touched on sort of investment opportunities through the pandemic and how tech may have been seen as a sort of safe haven.
Yeah.
Obviously, BGF dominates through a number of different sectors. I mean, how would you feel? I know that you specialise in the TMT space, but as a general...
It's a really interesting one. I think for me, probably the key word that characterises both the pandemic period and now is resilience.
Yeah.
And actually, I think they're quite nuanced and different between those two periods, in that I think during the pandemic, there was absolutely a flight to those safe havens. People were characterising it as that sort of K-shaped curve where you had certain businesses which were able to trade during the pandemic, where all the money was flowing into, and then those other businesses who really struggled, who weren't potentially able to trade, weren't able to raise investment in that period. And that was sort of the view of resilience at that point, was very much that kind of B2B, and that was driving those valuations that we saw in tech in the pandemic. I think what's interesting now, as some of those valuations cool off, is that there is a bit of a return. There's a return to fundamentals, and there was a departure in the pandemic from particularly looking at kind of SaaS multiples, revenue multiples. I think it was really hard to justify some of those from kind of first principles. And so I think where the market is going now, with the backdrop of Ukraine, various challenges that knock-on repercussions that's presenting to the market more broadly, is I think that frame of what does resilience mean, I think is shifting. And so actually, it's much more about embeddedness, demonstrating a return on that investment that your customers are making in your product. Because I think that's where people's focus will shift as there are those various pressure points across the P&L for those businesses.
I think resilience is absolutely the key word. I think it's been mentioned twice already. I think we're quite lucky to work in the tech sector. It is really resilient, but that's the word. It's changed. It's kind of subtly changed some of the behaviours and the way that people might buy or sell, but largely it's been quite resilient. Sector, I think it's very interesting to see the way that we've come through that, and the way that we would look at the market, particularly in tech. What might have generated value yesterday is going to be maybe slightly different to what will change tomorrow. I think behaviour is different. I think people are different as well. I think there's a correlation between attracting and retaining talent. I think the people strategy, there's always a correlation between good people and organic growth. And I think cash revenues today versus recurring revenues tomorrow, the way that we're valuing businesses, I think, is now is now very different. So we look at business in a really different way. But it's largely been very resilient, I'd say. I think you look at the M&A sector in the UK, I think it was very, very busy last year. You guys would know, I think we probably saw an average of up to 60 or 70 transactions per month. It's kind of leveled off a bit now, back down to more like 50 or 60, but it's still a very exciting sector to be in.
Evolution Capital is the first UK corporate finance boutique to exclusively focus on providing advice to the ICT sector. We are the leaders in our field. With activities spanning 3 decades, we have provided strategic and transactional advice to over 200 technology entrepreneurs, shareholders and management teams of both privately owned and public companies. We deliver outstanding transactional outcomes by unlocking intrinsic value in our clients' businesses, by providing expert advice based on meticulous analysis and robust methodologies. This is who we are and how we do it.